Hello, friends, trader friends, FX Street friends. Thanks for joining me for session number 3 of our MACD trading series. That's a lot to say. Let's just jump right into the lesson here. I won't waste your time. All I have to do is figure out how to share my screen. Okay, here we go. Give me just a second to pull up my presentation. And we're ready. Okay, I'm Jennifer, and this is the agenda for session number 3 of the MACD live trading webinar series. Today, I'm going to introduce you to the combo lines. The combo lines are 2 moving averages that give context to all price action. I'm going to share with you a strategy straight out of the combo method of trading. We're going to put it together with the MACD. How using the combo lines you can gain expectations about momentum on where it might be located on your charts, kind of a good thing to know. And I'm going to put them together and show you a strategy called the combo hopper, and it's where we stack up the evidence for a good trade opportunity. Before we get going into the new lesson, though, I'm assuming that you've seen lesson number 1 and lesson number 2. If you have not, you can visit the recordings at FX Street. But let's just do a pop quiz. There's no better way to make it stick in your brain than to do a little quiz. So we're going to try to review a few of the ideas here that we've already discussed. Number 1, what's the MACD's job? And if you're watching this on the recording, it would be great if you paused the recording and thought about that for a minute and see if you can answer these questions before I give you the answers, because that will really help solidify it in your mind. Number 2, what does the MACD line indicate? The MACD line, can you visualize it? Number 3, what do the histogram bars indicate? Those histogram bars in the MACD, something you've probably been looking at for years in the window at the bottom of your screen. So what do the histogram bars indicate? And number 4, how does the MACD identify momentum? All right, are you ready for the answers? Okay, so here are the answers. What is the MACD's job? MACD watches for change in the current market condition. That's it. That's the whole job of the MACD. It's not a lagging indicator. It's not just 2 EMAs crossing. It's actually crunching historic data on 4 different levels, which we're going to talk more about as we go through the series. But it all boils down to one job, and that is to watch for change in the current market condition and alert you when that's happening. Number 2, what does the MACD line indicate? And the answer is the MACD line is direction. If you think of the MACD line, think direction. Number 3, what do the histogram bars indicate? The histogram bars are momentum. So we have direction and momentum with the MACD line and the histogram bars. And how does the MACD identify momentum? The answer to that is the signal line is a lagging indicator of the MACD line. The MACD line gaps away from the signal line. It creates a picture of momentum. Okay, so that's a review from the previous sessions, and today's lesson is going to be about the combo lines. You're never going to want to trade without them once you know what they can do for you. The combo lines are simply 2 moving averages. I use a 50 simple moving average and a 100 simple moving average, and that's it. Here's what they do for me, and here's what they can do for you. Context for price action. They give me context for momentum, which I'm going to show you today. They produce repeatable patterns in price action. They identify your tradable spaces. They sometimes produce profit targets, sometimes stop losses, points of entry. They give me boundaries for my trade setups. They define trends, and they define ranges. That's an awful lot for just 2 moving averages. And I can't wait to tell you more about that. But today we're going to just take a page out of the combo trading strategy book, and I'm going to share with you a little bit about the 50 and the 100 simple moving average. I call them the combo lines, or just the lines. So when you see 2 lines on my charts, you're always going to know what they are. It's a 50 simple moving average and a 100 simple moving average. 2 moving averages give context to price action, dividing your chart into 3 spaces. I'm going to grab my little laser pointer. The space above both lines, the space between both lines, and the space below both lines. 2 moving averages helps us identify price patterns. The market flows through a series of repeatable patterns that I categorize as trends and ranges. All price action, as it flows through a series of repeatable patterns, starts and ends with a trend. Now, we're not going to talk about all the price patterns in this webinar, but I want to bring your attention to one spot on your charts where there's consistently momentum, whether the market is going into a trend continuation pattern or a trend pattern, or whether it's swinging into a range pattern. There's one spot on your charts where there is consistently momentum. When price is making a move away from both lines, it demonstrates a decision for direction as it extends itself away from a price level where it was previously comfortable. So when price has been in between the lines for a length of time, it's comfortable. But it eventually makes a more lasting move in one direction. Taking a position on one side of both lines, of both those moving averages, the market is making a decision or a commitment to that direction. I'm going to show you what that looks like. On this example, right now, you can see that price is located right in between the two moving averages. It's in a comfortable position between the two moving averages. When there's nothing to drive the market in one direction, price is going to end up between those two moving averages. Eventually, price is going to make a move either above both lines or below both lines. And when it does, I expect momentum. If it moves above both lines, I expect to see momentum going up. And if it moves below both lines, I expect to see momentum going down. This is really a very simple strategy that you can apply to your charts immediately. If you look back in the history on this chart, you can find examples where price was in between the two lines, and when it made a decision to move outside and stay on one side of both moving averages, there was momentum taking it in the upward direction. And here again, price found itself taking a break in between the two lines, and as soon as it makes a decision for direction, it crosses one line or the other, and that's where I have an expectation that momentum will be there. Why? Because the market has made a decision for direction, and I'm expecting to see some momentum pick up at that point in time. I look for times when the market is already in between the lines for a few bars, and then I get ready. Imagine now what would happen if you added the hopper to that with what we've already learned about the hopper. It's what I call a hopper opportunity or a hopportunity. Okay, it's a hopportunity. We just created a word. Adding a hopper to that combo strategy makes what I call a combo hopper. It's a point in time where the MACD signals change with a hopper, and the combo strategy signals decision for direction where I expect to see momentum. So in these examples, the MACD makes a hopper at the same time that we have price making a move away from both lines. And right there is a point on my charts where I expect to see momentum. Why? Because if the market had not made a decision for direction, it would have stayed between the lines. Here's another example where price was in between the lines, and we had the opportunity, the hopportunity, to see the MACD making a hopper up over the zero level at the same time. The MACD, remember what its job is? It's to tell us there's a change in the market. Well, that's consistent with what price action is telling me, because in between the lines, it is in a neutral position where it has no decision. If it crosses that line to make a move and stay on one side of both lines, it has made a decision for direction. Put that together with the MACD telling you, hey, we have a hopper going on, something's happening right now. And you get to line up two great signals and two great strategies for your best hopper opportunity. I call it a combo hopper. So let's review the setup really quick. This is very simple. Two moving averages, I call them the combo lines, 50 simple moving average and a 100 simple moving average. When price is in between both of those moving averages, the market is in a range of prices where it's comfortable. There's no commitment or decision for direction. There's no momentum. I happen to call this the inside range pattern. Now, you might be wanting me to qualify this. Does it matter if that space is big or small? Is it still neutral if there's a very large space there? Or do we expect momentum, to move if there's 200 pips of space in between the two moving averages? Well, I'm going to qualify that for you right now. The answer is no. It doesn't matter. If price is between the two moving averages, there is no commitment to direction and no expectation of momentum. Throw on the brakes, get a sandwich, get comfortable. It's going to be there a while. Okay, so that's when you want to get ready, because as soon as it's in that space in between the two moving averages where it's comfortable for a length of time, eventually decision comes back into the market, and we're going to be ready for that spot on your charts where you can expect to see momentum. Putting the signal together with the expectation for momentum. When the MACD line hops over the zero line, making a hopper, that hopper is a signal that what is happening right now is different than what was happening a while ago. When the market's in the inside range pattern, that space between two moving averages, we know there's no commitment to direction and no momentum. So cognitive reasoning would tell you that there's a change. The change from this would be decision for direction and momentum. In between the lines, no decision for direction, no momentum. Cross out of those lines, now we're on one side of both moving averages. The market has made a decision for direction, and the hopper confirms that, hey, there's a change happening right now. And so you put those two things together and you get a really strong trade opportunity that I call a combo hopper. So there you have the combo hopper trade. When price is in between the two moving averages, it makes a move above or below both lines. At the same time that the MACD is making a hopper, you have a good opportunity to find momentum and enough commitment to direction to get your trade into some profit. So let's look at a few examples. Here again, we have the MACD making a hopper. And remember, the MACD's job is to tell you, hey, something is happening now that's different than what was happening before. And price is also in this position where if it crosses that line and it stays on one side of both moving averages, I expect that it has made a decision for direction and there should be momentum in that moment. Here's another example where the MACD makes the hopper going up, and at the same time, we had price in between the lines for a few bars. And as soon as the market makes a decision for direction, it's going to cross that line and be in the position where you expect to see momentum and you expect to see the market commit to a certain direction for that specific direction for a certain period of time. If it fails to progress that direction, I'm expecting it to be right back in between those two moving averages. And in this instance, the hopper gave us a second setup. The MACD is laying on the zero level here for a little while price is in that neutral position in between the lines. No decision for direction, no commitment, right? No momentum. But if price crosses that line, I'm expecting that the market has shown up with a decision to move, and there should be momentum in that spot on your charts that you can identify by nothing more than two moving averages. But if you put that together with a hopper, the MACD is saying, hey, what was happening here is different. It's changed. Now something else is happening, and this is helping me out with timing, with decision for direction, and with an expectation about momentum so that we can get a trade on. And the market is going to commit to that direction for a length of time so that we can try to get some profit on. Here is a hopper where the MACD made a move in the downward direction. It had spent a few bars in between the lines while it was waiting for decision for direction to show up. As soon as the market showed up with a decision for the downward direction, at this point in time, I expect momentum to be there. If it's not, I expect price is going to be right back inside that space. But if it holds itself on one side of both moving averages, I'm expecting momentum is going to be there. It's going to show up, and it's going to hold a commitment to one direction long enough for us to get a trade. At the same time, what is the MACD's job? The hopper tells us that something is happening right now that's different than what was happening, and it might be a good time to get a trade on. And in fact, what was happening before was the market was in this neutral position where we have no expectation about momentum, commitment to decision for direction, commitment, anything like that. But when that changes and the market shows up with a decision for direction and a commitment to trade in that direction for a length of time, the MACD also picks up on that change in the market environment. So we get help with timing, we get help with direction, and we get help with momentum. Very, very simple. Here's another one that's really good. I noticed that we have quite a few price bars sitting in between the two moving averages for a length of time. When price is in between the combo lines, it is in a neutral position. What does that mean? Does it mean it can't move? No, it can. It can move all the way from the top to the bottom. Sometimes there's hundreds of pips in here. No decision for direction, no commitment, no momentum expected. So it just floats in this area where it is comfortable. It is taking a break from having to decide to trade in a certain direction. But eventually, the market will show up with a decision to move in a certain direction. When price stays on one side of both moving averages at that point in time, I'm expecting momentum is going to be there. If it's not going to show up, price will go right back inside that space. But you put that together with the MACD saying, hey, hopper's on. MACD says what was happening a little while ago is now different. And also what we've learned about the MACD is we also get some identification about the current direction. the overall market direction being down when the MACD line is below 0, timing for something happening right now when MACD crosses 0, and put that together with this point in time, this point, not in time, but this point on your charts where you can expect momentum. And how do we expect momentum on the charts? 2 moving averages, prices in between them. As soon as it crosses the line and makes a decision to stay on one side, momentum at that point in time, at that spot, that very spot on your charts, you can say, I'm expecting momentum to show up because the market has made a move over one of those lines, and I think that it's made a decision to move in a certain direction, and it will commit to that move long enough to get a trade. All right, go on to the next screen. So here's what's key about this setup. Prices in between the moving averages for, I would say, at least 5 bars. If it's in there for at least 5 bars, you know it's really taking a break from its decision to move in one direction. So I'm trying to establish a lack of direction and a lack of momentum. So 5 bars or more in between the 2 moving averages, and I have established that. I've established a point in time where we have the market taking a break, and there is a lack of decision, a lack of direction, a lack of momentum. The hopper happens within a couple of bars of price making the move away from those moving averages, and I know I have timing for a change, and the change in this instance would be what was no decision is now decision is on. But sometimes they don't happen all in the same bar. Sometimes price will move out of those, make the move over the moving average, and then in the next bar or two, we'll get the hopper. Or sometimes, I think more often probably, the hopper is going to happen, and then within a couple of bars, we're going to see price making a move away from the moving averages. So they don't have to happen in the exact same bar, but give or take maybe 1 or 2 bars. So I just wanted to point that out. We are putting 2 strategies together, and I give it a little bit of wiggle room depending on your time frame chart that you're working with, etc. It might take a couple of bars to line them both up at the same time. By the time the hopper happens, price can't be too far from the moving averages though. So if price moves first and it goes all the way through the space you were planning to trade, and then the hopper happens, you have to just say, I missed it. It just, the 2 weren't moving together, and it wasn't that hopper opportunity that I was waiting for, so I'm going to pass on it, and that's okay. So in other words, if price moves too fast all the way through that space before the hopper happens, we just missed that hopper opportunity. And I wanted to point that out because sometimes that happens, and you don't have to get every single one. Just get the ones that are super ideal before you put your money on that trade. So of course I have a button that's going to automate this strategy because it's just math. The whole thing is mathematical. It was very easy to set it up, to let the button program watch for the opportunity for us. So at this point in time, I know I want to see about 5 bars happen in between the 2 moving averages. We have a kind of a big space here, and maybe I think that price is just going to float its way in this space for a little while, taking a break off maybe this previous uptrending activity. And once that happens, once price is really well established in between the 2 lines, I know that eventually decision will come back into the market, and price will cross one line or the other and show up with momentum, with a decision and a commitment to one direction for a length of time so I can get a trade on. I also see that the MACD line is pretty close to 0 here. So as price settles into a neutral position, taking a break, I also have the MACD getting ready to roll out a hopper with price action in this instance. So at this point in time, I can go ahead and use the automation. I can click on the combo hopper button to activate it for automation, and then it's going to watch and wait, because this could take a few hours, a few days. We never know how long it will take. We just know eventually it's going to happen. And so I use the combo hopper button to open the trade the next time price makes a decision to move above or below both lines, as long as there's a hopper within a couple of bars at the same time. So this is just an example of the program that I'm going to be telling you more about through this series. The combo hopper button is the button we're talking about tonight. If you only want to take the next buy combo hopper, you can actually disable it for sells, or vice versa. You have lots of control with this particular program. If you want to add a buffer to the MACD like we talked about last time, you can do that. If you want to make sure price doesn't move too far through that sell space or that buy space before the MACD hops, you can actually set minimums and maximums so that you can make sure that you have all the control in the world over the setup, and this automated robot doesn't just slip you into a trade with poor timing. So there's a lot of safety guards on here to just not take the trade if it can't take it perfectly, which I love about this program. If you want a stop loss and a profit target to be placed when your trade is open, you can do that too. So basically, am I saying it's perfect? Yes, basically I'm saying it's perfect. It's a pretty awesome program, and I have quite a few of my clients running it right now, and I can tell you I, for one, haven't taken a single trade without it since I released it in last December. So I'm going to keep you posted because the button program is going to be on sale this week. I don't leave it on sale all the time because it requires a little bit of training, which I've done a lot of, and it requires a lot of answering questions and so forth. So I like to do it all at once and, bring people in all at the same time. And so I can spend a lot of time with the new people to get used to the program. If you're one of those people that are interested in it, you can let me know. But I will be sending out some emails, and I will be informing you in this webinar series when it becomes available. You can automate the hopper, the combo hopper, and all the other MACD strategies that I'm going to teach you in this MACD series. The button program runs only on MetaTrader 4, and you really won't want to miss it because when I open the sale, it will only be open for about 2 weeks, so I will keep you posted. Last thing to say about the button program, you don't have to get it, okay? Of course I want you to, but it's not necessary to trade the strategies that I'm teaching you. It's just cool that the strategies that I'm teaching you can be automated, and I have a program already built that will do that for you. All right, so that was a short lesson tonight. I'm already on to the review here. So here is our review of tonight's lesson. Tonight, I introduced you to the combo lines. It's 2 moving averages that I call the combo lines, and it's the 50 simple moving average and the 100 simple moving average. When price is in between both moving averages, the market is in a range of prices where it's comfortable. There's no commitment or decision for direction. There's no momentum. I call this the inside range pattern. Now there's one spot on your charts that you don't want to miss. There's one spot where there is consistently momentum, whether the market's going into a trend pattern or a range pattern. Wait for price to be in between the 2 combo lines and then get ready, because when price makes a move away from both moving averages, it demonstrates a decision for direction, and it extends itself away from a price level where it was previously comfortable. That's where you can expect momentum, and you can pinpoint that location on your charts with the use of just 2 moving averages. It's pretty awesome. It's just a page out of the combo trading notebook. All right, so the combo hopper is the next thing to talk about. The hopper tells us when something new is starting in the market. It's the MACD signal that says, hey, what was happening just a little while ago is now not happening anymore. We have something new starting. And when price is in between those 2 moving averages that I showed you tonight, we know there's no decision for direction and no momentum. So the combo strategy tells us to expect momentum when price makes a move away from those 2 moving averages after being in between them for a period of time. And you put that together with the MACD hopper, and you get the combo hopper. Expectation about momentum from the combo lines, expectation about timing and direction from the hopper. So put it together, it's a combo hopper, it's a hopper opportunity or a hopportunity, and there you have the review. Coming up next time, I have a MACD signal for the counter trend trade opportunity, the difference between fading momentum and actual counter trend signal with momentum. I'm going to show you that, and we're going to talk about trading against the market and how it was never easier than with the with help from the MACD and getting that counter trend signal from the MACD. Thank you so much for joining me for lesson number 3. It was a short one tonight, but really a powerful, stay with you forever kind of lesson and kind of information about adding 2 simple moving averages to your chart and pinpointing a location where you can expect momentum. If you have any questions about the strategy or about this lesson, you can always email me at combotraders@gmail.com or combotraders@gmail.com. And also, I'm going to now stop sharing so that I can see if I can move over to your questions and comments and see if there were any questions that I can answer immediately before I let you go. And if you have any additional questions, please, and if you catch the recording and you have any questions or requests, you can always send me an email combotraders@gmail.com. All right. Hey, Sunny's here. Good to have you here. King asks, what time frame? You're looking at my charts. It's more than likely going to be 4-hour time frames, but you can use this, and I do, on any time frame, from the 5-minute charts, from the 1-minute charts, all the way on up to the weekly charts. The strategies that I'm teaching you with regard to combo, which is the 2 moving averages, and the MACD strategies, which I refer to as the Hopper series, they're all applicable across the board. Any trading instrument, any time frame, period. It's a really fantastic strategy that can really help you out in any of your trading. Did I write the code or lay out the parameters for writers? I'm not really sure what you mean. I have my own team of programmers, and we wrote our own code. And there are quite a few input parameters that you can use to control the program in lots of different ways and customize it. I don't have my FX track record for the button because it's only semi-automated. It only runs when you click on a button. So it will be different depending on who's running it. But I can tell you more about that. If you have more questions about how the button works, I'm going to be sending out some more information about the button a little bit later on this week. You're a counter trend trader? Well, let me tell you what, you're going to love the next lesson. So I hope you come back on Thursday, same time, same place. We're going to be talking about one of my favorites. They're all my favorite. But we'll be talking about the counter trend trade signal from the MACD. And we call it the reverse trigger finger. It's going to be awesome. You're going to love it. I can't wait to show it to you, especially if you already know that you are a counter trend trader. If you are a counter trend trader, you need the next lesson. So I'll see you then. Yes, programmers are brilliant, and I'm grateful for them. All right. Okay, well, that's it for tonight. Thank you so much for joining me for this brief but powerful lesson about using 2 moving averages on your charts so that you can pinpoint one spot on your charts where you can expect momentum no matter what. It's like magic. It's really awesome. Send me an email. Let me know your questions and let me know what you think about the series. And I'll see you next week on Thursday. Same time, same place. Thank you, FX Street.